Good evening, everybody. I'm Megan Baylor, the Director of Education and Events at PVMA. Thank you for joining us tonight to talk about personal finances. The COVID-19 pandemic has caused major and rapid changes in the way veterinary practices do business and how our incomes are constantly fluctuating now. Tonight we have an expert to help us navigate our personal finances. If you'd like to ask questions throughout the webinar, there is a Q&A section at the bottom of your screen. Feel free to go ahead and put questions in there as you think of them. At the end of the webinar, we will go through those questions one by one. If for some reason we don't get to your question, we will reach out to those experts to get those questions answered, and we'll post everything to our COVID-19 resource page on pavma.org website. As a PVMA director, I want to let you know that our team is working diligently to get as much information to you timely and accurately during this crazy time we're in. If you're not currently a PVMA member, I highly encourage you to go ahead and join PVMA. Right now, our membership team is having your dues prorated for the remainder of the year, so go and check it out and see what all PVMA does for you on our website. Tonight, we are pleased to have with us Ever Gonzalez. Ever is a financial representative with the First Financial Group. He's been very passionate about helping the veterinary community. He has hosted many webinars and discussion groups for veterinarians over the past years. Now, as a disclaimer, this information presented in the webinar is intended for educational and informational purposes only. The webinar is going to be recorded and added to the PVMA COVID-19 resource page. Ever, thank you for being here with us tonight, and I'm going to let you take it from here.
Great, thank you, Megan. So I think the first thing I'm going to start off with is what qualifies this guy to talk to veterinarians about personal finance and what's going on. So I'm going to give you a little bit of background about me. I've been a financial advisor for 14 years. I have about 450 clients nationwide, and about 200 of them are veterinarians. And the question I always get asked is, how on earth did you get started with veterinarians? Well, I met a veterinarian 14 years ago, and you guys have a habit of hanging around with each other. And so she introduced me to two other veterinarians, and here we are 14 years later, and I've become very passionate about the veterinary community because the veterinary community has been very kind to me. I actually present at various associations throughout the country, and I can tell you, of all of those that are out there right now that I'm familiar with, which is about 10 others, the PVMA is by far the most active in providing its membership information about what's going on and providing you resources to help you manage through this very interesting and unusual time that we're in. And so I want to really commend the PVMA from doing so, because there's other associations out there that aren't doing nearly what others are doing. So thank you for doing so, Megan. What I'm going to go to today is I'm going to go through a couple of bullet points here that I'm going to go through essentially the agenda. As Megan pointed out, if you have any questions, please put them in the Q&A, and then we're going to do at the end, we're going to address those. And then if I refer to any resources at all whatsoever, or I say, hey, I'm going to put that in a website, or I'm going to put a link, Megan will have those tomorrow morning, and she's going to post those for everybody to access. So don't feel like you have to write a bunch of stuff down tonight. We'll provide anything that I spell out. I'll provide that to Megan, and she'll post that. So what I'm going to cover tonight really is 6 basic topics. The first one is what to do if you're laid off or furloughed. The second one is what should I be doing from a financial standpoint during the quarantine period. Then I'm going to talk about what is happening with student loans as a result of the COVID relief efforts and kind of what I should be doing with my student loans. I'm going to talk a little bit about kind of what's happening with the stock market and when will it all return to normal. Should I be putting money into my 401k or not? And lastly, about the stimulus checks. I'm going to talk a little bit about that with a lot of my clients. There's been a lot of questions around, stimulus checks and how they're going to work, as a taxable, et cetera. I'm going to go through that as well. Okay. So the first thing is what to do if you're laid off or furloughed. The very first thing you should do is apply for unemployment. Okay. You should apply regardless of how think you borderline may be to getting it or not. Let them decide. No, don't decide for them. Right now, they're being incredibly generous and incredibly quick in accepting you for unemployment and providing you with unemployment. So if for whatever reason you're laid off or furloughed, please apply for unemployment. I'll give you a very unusual situation that happened to one of my clients. What they did is they shifted her from salary to hourly and then cut her hours, which is kind of a nasty thing to do. But she says, well, I'm not going to apply because really, I'm really kind of like on call, but I'm not getting any hours. I said, go ahead and please apply to unemployment. She did, and she started collecting unemployment. So the first thing you should do if you're laid off or furloughed is to apply for unemployment. Okay. If that happens, what should you be doing? Obviously, the first thing you should be doing is I would call around. A lot of my clients are actually getting solicited to do a lot of relief work. There are some clinics out there that are like going 100 miles an hour with respect to their load has increased significantly. Now that varies by where you are in the country, but call around, call friends, see if anybody needs any help. That's the first thing I would do because I'm hearing a lot of my clients are completely slammed at their clinics. The other thing you should do is obviously minimize as much spending as you can to maintain as much money as you can under your belt and as liquid as you can. That's just kind of common sense. I know I'm not breaking any incredible financial ground here, but those are really important things to do. Anything that you can cut back on, obviously, if you have furloughed or unemployed, and if you're saving, doing any regular saving, you should probably cut that back immediately. Those things are really easy to start and stop. I've had some clients of mine that have been furloughed. We stopped investments very, very, very quickly. Those can be stopped with a phone call, and then we'll talk about when we start those back up again when they're back at work. So basically, it becomes really a challenge to make sure that you're minimizing your expenditures and waiting for unemployment to kick in. Okay. Now, let's talk a little about student loans. That's what's going on with the COVID relief package that was passed. So for private loans, nothing really changed, right? Your car loan kept going. Your private student loans are going to keep moving forward. You're going to have to keep paying on those unless the specific provider that you're working with has provided you with some relief effort. Typically, that wasn't the case for private. For federal loans, on March 13th, all automatic payments or contributions that you were making were stopped. You didn't have to do anything. Those were all stopped, and all interest rates went to zero. So essentially what happened for all federal loans out there, it's like time stopped. And what that means is your loans are not accruing any interest and you're not making any payments, and that will continue through September 30th. After September 30th, everything is supposed to start back up again in normal, okay? What is also happening is if you are relying on a public service loan forgiveness or a regular student loan forgiveness, all these months that are in forbearance will actually count towards the forgiveness period. So for example, if they stop your payment in March, in April, in May, June, July, August, and September, that's 7 payments that you didn't make, but those will count towards the forgiveness period, okay? And I'm gonna give to Megan, I'm gonna put a link up that will provide a great, it's run by the federal student aid folks, the government folks, and it has a lot of this stuff is in there, but I'll provide that link to Megan tomorrow. But basically it all counts as if you made the payments towards forgiveness, even though you're not making any, okay? So then the question that I get asked quite a bit by my clients is, okay, what should I be doing now that the loans are kind of in this what's called an administrative forbearance period? The answer to that question is depends. If you're still working and you're getting your normal pay and you don't expect the clinic to slow down in any way, shape, or form, and you're going to rely on loan forgiveness, there's no reason why you should add extra payments in there. Okay. If your intent is to pay off the loans, and all the conditions that I just talked about apply, meaning you're working, your clinic doesn't look like it's going to slow down at all, and your intention is paying off the loans, what you should do is send in the payments. Now, you have to manually go do that because they're not going to do it automatically. You would send in the payments, and as a result of that, you're going to get a little bit farther ahead than you would have otherwise, because essentially you're sending payments in, they're getting applied first to interest, and then if all the interest is gone, they'll apply it to principal. So essentially you're going to make you some pretty good headway on the loans. Okay. Now, what should you be doing if you're unemployed or furloughed? Obviously, you should take advantage of this period and that you don't have to pay the loans, because that's just one less drag on money leaving your world. Okay. So really, it all depends on kind of what your job situation is. The third scenario is you're still working, but your hours are being steadily reduced. If that's the case, I would not send any extra money into your loans. Just send that right into your savings account, just in case they really cut back your hours even more and you're going to need the cash later on. I would send that money into your savings account instead. You can always come back later on and take all that money that went into your savings account, and then you can just apply it to your loans at that point in time. But if you're a little bit unsure as to kind of what your clinic's going to be doing, what your practice is going to be doing, unsure what the hours are going to look like in the future, instead of sending the payments in manually, just instead pay yourself by sending that money to the savings account, just in case you need it later on. Okay, so those are really the three major scenarios. Once again, if you have private loans, those are going to you're going to have to keep paying those. No, if they're in an automatic payment plan, they're going to continue to pay, pull that from your checking account. Okay. Let me skip to the stimulus checks. There's a lot of crazy things going on out there about the stimulus checks. Number one, if you want to find out when your check is coming, go to irs.gov/EIP, and I will send that to Megan also tomorrow, but that's a place you can go find out and get some timing on when your check is coming. Okay. Here are some things about the stimulus checks. Number one, if you're single and you make less than $75,000 a year, or you're married and you make less than $150,000 a year, you're going to get the full amount. For example, a single person is going to get $1,200 of a stimulus check, and if you're married, you're going to get a total of $2,400. If you have any dependents under the age of 17, you're also going to get $500 for each dependent that qualifies under the age of 17 as well. Okay. If you make more than $99,000 a year as a single, or $198,000 joint, you're not going to get any stimulus check. Okay, so $75,000 or less as a single, you're going to get the $1,200. If you make $99,000 more as a single, you're not going to get anything. And if you make between 75 and 99, you're going to get a proportional amount on a linear scale between 7,500 and 99. So the closer you get to 99, the less you get. If you're married, once again, $150,000 or less, you're going to get the full amount if you file jointly. And then if you make greater than $198,000 combined, you're not going to get any stimulus check. And once again, between 150 and 198, it's going to be a linear scale decreasing all the way to when you get to 198 or more, you're not going to get anything. Okay. So here's a couple of things on the stimulus check. It is not taxable. It's not going to affect your taxes next year because you're getting a $1,200 check today. It's not going to be reported as income. It's not going to push you into a higher tax bracket. So let's say you're in between a couple of tax brackets, and that $1,200 or that $2,400 is going to push you into the next one. It will not count. So your taxes are going to be completely unaffected for next year. So it does not count as taxable income. There's a lot of stuff going on out there. That is not the case. If you were going to get a refund next year, you're still going to get a refund next year. The other thing that's going around out there that's patently not true is that it's going to reduce your refund next year. It will not. what this is, and it's a little bit complicated, but the way they did this is everybody's going to get a credit next year anyway. They're just taking that credit that you would have gotten next year and you're bringing it up into this year so you can have it today. So bottom line is you're going to be completely unaffected from a tax standpoint when you file your taxes next year, okay? The other really important thing to note is, let's say that you haven't filed your 2019 taxes yet because you're not required to file them until July 15th. So you apply under your 2018 tax return. And let's say that under your 2018 tax return, you made $70,000 as a single filer, which means you're gonna get the full $1,200 check. And then when you file your taxes here after July 15th, you actually ended up making more. You will not have to return that $1,200 they sent you, okay? So if you're going on your 2018 taxes and you qualify for the full amount, and all of a sudden you file taxes for 2019 and you're above that number where you would get the full stimulus check, you do not have to return what they sent you filing under 2018, okay? So that there's a lot of misinformation going around the stimulus checks. So hopefully that will provide some clarity around that, okay? Now, the checks should start to be rolling out here pretty soon. My understanding is that some of them are already started going out. What I've actually seen in print, though, is supposed to be April 24th, and then they can come as late as September. So anywhere between April 24th and as late as September. But once again, going to irs.gov/EIP, that's going to be a good place where you're going to be able to get sort of an update of kind of where the checks are. What should you be doing with that? Once again, it all depends on kind of what your financial situation is, right? If you're furloughed and not working or laid off, obviously bank it because you're going to need it. If you are working and your hours haven't been reduced and you think there's no shot of that happening, then by all means, apply it. If you have any outstanding debt, apply it to your debt. That's going to be a really good use of it. And if you're unsure if your hours are going to continue and they may be reduced, just put it in your savings account. Once again, keep the money as liquid as you can to protect yourself. And in case, for whatever reason, when we start coming out on the other side of this very weird situation that we find ourselves in, and you ended up not having to have used that money, you can always use it for whatever the heck you want to, paying down debt, whatever. There's no specific use for that money. You can use whatever you want to with it, but you can always, it's always better to err on the side of putting it in your savings account, because you can always then take it out of there and send it to any debt or anything else. But if you send it to your debt first, they're not going to let you take it back out again. So that's probably the best way to handle the stimulus money. Okay. So what's going on with the stock market right now, and when will it return to normal? There are two kinds of market downturns that typically occur. The first one is typically economically driven, meaning there was something in the economy that caused the market to go down. For example, incredibly high unemployment, out of control interest rates, inflation super high. The last one we had that met that condition was in 2008 when they had the mortgage crisis. Essentially, banks were failing and they were lending money to people that didn't have the money to pay back mortgages, et cetera. That created the last economically driven market downturn. Economically driven downturns tend to have the market fall a lot more and take longer to recover from. So to put it into perspective, the biggest drop that was seen in 2008 was a 58% drop. And it took us a little while to get out of that. Took anywhere, depending on how you read the numbers, between 6 months to a year to fully to recover and start seeing things get back to normal. Okay. The other type of market downturn is kind of the one that we're seeing now, which is a little bit more reactionary in nature. The economy was doing great, and all of a sudden things came out of China that there was this weird thing going on over there, and China was starting to shut down, and the markets here in the United States got really jittery. And people started selling investments and moving into cash. And all of a sudden we started seeing what we saw happening. These kind of reactionary market downturns, we've actually had 6 in the last 5 years. They typically don't cause a real big drop. To put in perspective, the biggest drop we've seen so far is 25% compared to minus 58 in 2008, and they tend to not last very long. Now, the question becomes, when would it all return to normal? And that is a fantastic question. My crystal ball, unfortunately, broke yesterday, right before we were getting ready to do this WebEx. So I really don't have an answer when things are going to return to normal, but one of the other client segments that I have, in addition to veterinarians, is I work with a lot of medical physicians, and I actually have a couple of physician clients that are experts in the field, and obviously they're very busy right now. And what they're saying is their best guess, and obviously it's their best guess because this is sort of an evolving situation, is they're saying, hey, listen, their best estimate would be mid-May, kind of things starting to, meaning loosening up on the quarantine, okay? Which means slowly people getting back to work. And then what we'll see happening is slowly, as people return back to work and we start recovering from this very slowly, the market will start to come back. If you've looked at the market returns lately here, it did start to come back somewhat. But my guess is not till mid-May. Bottom line is whenever they start releasing the quarantine, then you'll see people come back to work, and then you'll see things very slowly return back to normal. There's still a lot of, according to them, once again, I am not a healthcare expert, okay? According to them, there's still a lot of unknowns around, what's going to happen as people slowly, drift back into reality. But bottom line is, my guess is it won't be nearly as long to recover as it took in 2008 because the economy was kind of doing pretty good. And if you think about it, there's still a lot of pent-up demand. A lot of people want to consume things, but obviously they can't. And as a result of that, when we're able to now get out, a lot of us have been not going anywhere. Obviously, there's not a lot of places to go, and we're going to want to go out and hang out with friends and do so. So I think the economy is going to come back fairly quickly. But this is not something new. The events that are causing the market to do what it's doing is new, but we've seen these kind of market downturns before. And we've been on a pretty good upward movement in the market since 2008. And so, this kind of correction would have happened somewhere down the line. It just happened to be sort of pushed by the virus issue. Okay. What should you be doing with the money in your 401k right now? Don't do a whole lot with it. Okay. Don't go around changing investments. Don't move it to cash. If you were properly invested beforehand, you should have been properly invested for the long haul. And there's nothing really fundamentally that has changed in the market to have you change that. Okay. So if you were invested in the market, continue to be invested. If you're still working, your 401k contributions are still going to be going into your investments. And actually, if you think about it, for every given dollar you invest now, because the market has dropped somewhat, you're actually going to end up buying more shares of the mutual funds inside of your 401k, which means you're actually buying more stuff for the same amount of dollar. And then when things return back, you're going to reap the benefits or that. So if you are properly invested beforehand, you should continue to invest and don't change anything and so forth. Okay. So shouldn't be making a lot of changes. These things happen all the time. You should always be invested for the long haul. Every study that has ever been done in the history of investing and finance always says that it's impossible to time the market. You cannot time the market. Okay. One of the analogies that I always use is I have a lot of friends that go to Vegas, and everybody that I talk to that goes to Vegas, they always say they won at the tables. They said they made money gambling. Funny enough, they have some really awesome big buildings out there. So if everybody that goes out there I talk to wins, hard to believe that everybody does win because they have such beautiful buildings out there and they keep building casinos all the time. So the bottom line is, look, you can't time the market. Invest for the long haul, do it correctly, properly diversify, and rebalance your assets periodically, and things are going to end up being okay over the long haul. We just have to get past the current state that we're in. Okay. So that's kind of what I had from a preparation standpoint, Megan. If you want to go through any of the questions that are out there, I'm going to do my very, very best to answer as many as I can. And the ones that I can't, I will get the answer to, and we'll post that tomorrow.
Wonderful. I have a question here. It says, can you file for unemployment if you're willing to stop working when work is available because you live in a COVID hotspot and didn't want to take the risk?
My understanding to that question is that you can. What I would do is, once again, I don't know where you are, but my recommendation is you contact the unemployment office and say, look, here's the situation I'm in. And my guess is what they're going to tell you is that, yeah, you can. I believe I read that probably about 2 weeks ago. I can't remember exactly where, but I think the answer to that question is yes. But the best place to go is ask the unemployment office. They're going to clarify that for you.
Okay, the next one is asking for you to repeat the amounts of the stimulus checks for, they're specifically asking for married couples.
Sure.
But I mean, just maybe briefing that again would be helpful.
Absolutely. I'll repeat it for both. So if you are a single filer and you make under $75,000 a year gross income, you're going to get the full $1,200 check. If you make between a single filer, you make between $75,000 and $99,000 a year, you're going to get some number between $1,200 and zero. Meaning, if you make $75,000 and $1, you're going to get $11.99, and if you make $98,999, you're probably going to get $1. So it's a decreasing scale as you go from $75,000 to $99,000. If you're filing jointly, if you make joint combined income of $150,000 or less, you're going to get the entire $2,400 amount. And if you make between $150,000 and $198,000, you're going to get some amount on a decreasing scale as you approach $198,000. For every dependent under the age of 17, you're going to get an additional $500. And what was unclear to me is that also under a sliding scale or not? Not sure.
Great, thank you. This next question says, if I am retired, should I take my annual required minimum distribution from my 401k now or wait for when?
They have suspended the need for taking required minimum distributions during this time frame. So if you do not need the money, I would not take it, because two things are going to happen. Number one, obviously, most likely, unless you were invested in cash, your money has dropped in value by some amount between 1%, -1 to -25, right? So if you pull it out now, you're pulling money out that assets are going to have to be sold to convert that to cash, and you're going to be essentially finalizing that loss. The second thing is you're going to have to pay taxes on that amount of money that came out. So if you don't need to, I would not, but obviously if you need to, you need to, but it's not required. During this time period, they suspended the required minimum distribution. The other thing to remember is the rules also changed. If you hadn't taken any required minimum distributions before December 31st, meaning you had to start taking them after January 1st of this year, they moved that age from 7.5 to 72.
This next question says, should I continue to allocate for catch-up on my 401k?
Once again, if you, depending on your financial situation, right? So if you are furloughed, unemployed, it's really a moot point, right? Because you're not working and there's no contributions being made. Number two, if you're still working and you're going like gangbusters and you foresee your hours not getting cut, then yeah, absolutely allocate the catch up. If you're a little bit unsure as to kind of what your hours are going to look like in the next 2, 3, 4 weeks, 5 weeks, whatever, then I would not. Just keep as much money in your wallet as you possibly can.
This next question asks, should we move all balances to treasury and stable value?
Well, first of all, it's always tough to give advice to people I don't know, right? It all varies, right? It depends on your age, your level of risk, how much money you have, and so forth. So it's awfully tough for me. I'm not trying to avoid the question. It's just a very tough question for me to ask because it has a lot of variables associated with it. I can tell you though, if you're selling off investments, so if let's say you have money invested in some kind of mutual fund, let's say a growth mutual fund, and you've lost whatever 18% of the value of that so far, and you move that money into treasuries, you have now essentially solidified that loss, right? Here's the example that I would use. Let's say you bought your house for $150,000 and the market went down, and if you want, and you look and on Zillow and your house is only worth $100,000 now, you really haven't lost any money, right? Because you're only going to lose the money if you sell the house now. If the house then comes back up again to 160, 170, $200,000, you really haven't made any money yet until you sell the house. So it's only when you sell the investment and you convert it to something else that you actually solidify the loss.
All right, this next question says, is it too late to put money into the stock market since it has already rebounded somewhat?
Yeah, it has rebounded somewhat, but not completely, right? So what I tell people is, look, if you have money that you do not need, that's sitting in cash and your situation is stable, now is a great time to put it into the market, right? You never buy something when it's super high priced. You always buy it on sale if you can. And right now, if you think about it, investments are kind of on sale, quote unquote, right? So if you have money, once again, that is in cash, they don't foresee needing because the situation is stable, now is a great time to get in because it's actually still below what it was at the onset, back at the beginning of March.
This next question is asking, if I don't have a 401k, is it a good time to set one up ASAP?
Right. So if your employer is matching, then it's a great idea. Once again, if your situation is stable and you don't foresee your hours decreasing, it's a great idea to start up a 401k. And you should always contribute into your 401k whatever you need to contribute to get your employer maximum match.
I got my tax return check back in March, but when I set up direct deposit through the IRS website, they did not have my 2009 tax return info. Is that normal?
Can you repeat that question again, Megan?
Sure. It says, I got my tax return check back in March, but when I went to set up my direct deposit through the IRS website, they did not have my 2019 tax return information. Is that normal?
Yeah, I'm sorry. I'm not familiar with that situation. Doesn't seem quite right. But once again, that's a little bit out of my area of expertise because I'm not an accountant or a CPA. So sorry, can't answer that one factually.
This next question is, if you do not qualify for a stimulus check this year based on your 2019 tax return, but because of reduced hours in your income will drop, will there be a tax credit available in 2020 tax return?
Yeah, so there is still going to be a credit in 2020. So really what they're doing is they're kind of moving that credit into 2019. But if you're going to qualify for that credit in 2020, even though you didn't get any stimulus money in 2019, you may qualify for that same credit in 2020 if your income meets that criteria. That's my understanding.
All right, and as of right now, this is our last question that we have in the queue. I am a relief vet who went from working 5 to 6 days a week to only working 4 days in the past 4 weeks. Should I or can I apply for unemployment since I do still have occasional work days?
Yeah, if you're working, they will not accept your unemployment claim.
Okay, and that looks like all the questions that came in through the Q&A.
Megan, I have one more thing to add real quick.
Please do. I'm going to check the chat if anybody else has any other questions, but feel free.
So one quick thing is I have a website that I communicate information every week on about what's going on. If you're interested, once again, look, I'm not going to bombard you with emails and so forth, right? But if you go to dvmfinancialadvice.com, that's dvmfinancialadvice.com, that's my website. It's for veterinarians only. I only post information there that is pertinent to veterinarians. And if you contact me through that website and you give me your email, what I will do is I will add you to an email list. And every time I post something on that website having to do with COVID or something of student loans, of something that's pertinent to veterinarians, you will get that email with that link and what that information to as well. So I will solicit that, send it out there. Once again, it's dvmfinancialadvice.com. You get on there, you hit, hey, contact me, but just put your email address. Just say, hey, Ever, you asked to add myself to your email list. I'll put you on there. So every time I post something, you'll get an email with a link and it'll send you right to that link for that information that's going to be pertinent for you.
We did have one more question come in. I'm not exactly sure if I completely understand the question. So if I misrepresent your question, please feel free to resubmit it. It says, is it not true the UC will cover hours cut to make up for the difference?
Megan, I'm sorry, I'm with you. I didn't understand that question.
So yeah, here we go. What is the maximum amount of UC PA will pay weekly?
Oh, yeah, not sure. Yeah, that's not a figure I have off the top of my head. But if you contact the unemployment office, they'll be able to tell you that pretty quickly.
Wonderful. I didn't see anything in our chat. So with that, I would like to thank you all for taking time out of your evening to join us. As a reminder, this was recorded and will be added to our resources on the pavma.org website. We actually now have it right on the homepage. You scroll down towards the bottom of the homepage, you'll see direct to our webinar series that we've been doing with all of the information that we have for you. Also in the future, if you have any ideas or want any topics covered in a webinar, we are definitely interested. Feel free to reach out to our information. There's like a little questionnaire form on the COVID-19 resources page. Feel free to just drop that information in there. We encourage you guys to just keep going back and checking out our website to find new information. Again, thank you all for being here and have a really great night. Thank you again, Ever, for being here.
My pleasure. Have a great rest of your night. Thank you.